Everybody, or good evening wherever you're at in the world. Today we got a lot to cover. I think this is probably going to be a quicker stream than normal. Hopefully it is, because I got some things I got to head out and do, but I definitely wanted to at least talk about what's going on in the markets and kind of just go over the current news and probably how to position yourself. Definitely want to talk a little bit about on how you can position yourself, because we are just T-minus 6 days from April 2nd as of the making of this stream. And when April 2nd comes around, it's going to be wild. All right. It's going to be absolutely crazy. That is when, all the tariffs are going to be announced. And the news is already heating up with what's going on. All right. You have, and I'll get into this in just a moment, but you basically have other countries that are deciding on how to approach these tariffs and if they're going to implement their own reciprocal tariffs on the United States, which, again, will just cause us to, implement even more reciprocal tariffs. So this could turn into a trade war, and it can get pretty nasty. There was, a little bit of dovish talk from President Trump talking about, as far as the tariffs, that he's used words like flexibility and, we can probably not blanket everybody with the same tariff. And, they were talking about a tier system. So, we're going to cover all of that. We're going to talk a little bit about Coreweave. Actually, I think Coreweave is probably going to take up a bulk of this stream, because they were all over the news, right? Because they're an NVidia backed company. And we'll get into all that, but they're an NVidia backed company, and it seems like it's not going so well for them. We also will talk about Gamestop and kind of what's happening with them, because that was very interesting to hear what is actually, going on with Gamestop. So we'll cover all of that and more. So let's get right into it. Okay. So this is the portfolio as it stands today. $51,000 in annual net income, $6,900 for March. Of course, these numbers are not real. Dividends do fluctuate from month to month. So I suspect that in, April, that the dividend income is going to be substantially different. I think it's probably going to drop a lot because of kind of what's going on. But, we'll see what happens. So right now, sitting at a portfolio value of $572,000. The market value right now is $550,000. So I'm still down about $22,000. And I've been entering and exiting, short and long positions. I think I'm going to stop doing that, because it's just the market is so unpredictable. And I'm not a good trader. I'm just going to go ahead and admit that I'm not a very good trader. So instead of constantly losing money or losing my trades, I think I'm just going to stop for now. I do want to explore the whole cover call, option trading strategies that are out there, because I think there's a little more safety in that and a little more risk adjustment in that, that strategy. But again, with cover calls, you have to purchase $100 worth of, you have to purchase 100 shares worth of any particular stock, right? You can go with some very cheap ones, but you got to make sure that there's, some volatility there, that there's some, actual money to be made there. Also, I also thought about looking into this whole option wheels thing. I haven't quite dug deep into it, but again, I don't really want to be actively day trading and staying stuck at a computer. I'd rather swing trade something, or if I can, do some type of cover call trade. But again, all that's left to be seen. This is why, cover call ETFs are so popular. Not only are they completely, quote unquote passive, but you don't have to do any of the options yourself, and you don't need the money in order to purchase 100 shares of something, right? So I think that's just, another way to just generate income for the income portfolio. For the core portfolio, it's going to remain the same. There's nothing sexy or exciting in there. I'm, again, just heavy into the REIT positions. I have, I think, 23 different holdings, or 21 different holdings. But it's mostly approaching like an index type of approach. So I also have a technology ETF in there, which I'll cover here at the end of the stream. All right. So I did mention that I would be doing a follow-up for the American Association of Investors, individual investors, excuse me. So the question is, what direction do AAII members feel the stock market will be in the next 6 months, right? That is the question that keeps coming up. This is for this week, March 26th. So as you guys can see, we've been trending up towards bullish, right? Which is kind of funny, kind of weird, but yes, we've been trending up bullish. And then, you know, we've actually been downgrading our bearish stance. So a lot of investors are feeling that we're going to be heading into greener pastures, greener days in the future and over the next 6 months. Now, I didn't know this. I didn't really stop to think about this. But when Trump was elected president the first time and he took office back in 2018, in the first 6 months, we were in a down market. We were pretty much in a down market. He was implementing all these changes. The stock market pretty much did not like that. And the stock price reflected, right? The entire market was down. And that happened. And from the beginning of 2018, it took about 6 months to recover to all-time highs. So I thought that was just a very interesting point, a very interesting item or data point. So maybe we have about 6 months worth of this volatility ahead of us. So again, if you're a prudent investor, you're going to look for opportunities to buy. You're going to be looking for opportunities to get in, build your positions, or just hold cash, right? Hold cash for those really, really deep red days. I don't think this is a time where investors should be, you know, completely defensive, you know, staying out of the market, not participating. I think this is probably the better time to participate. As I've mentioned in previous streams and in previous, video uploads, this is going to be the most important year. 2025 is going to be one hell of a year to make money, right? To make money, to invest, to get some type of return. If you're not going to be participating, you're not going to get any of that. So you're going to miss out on all the gains or all the potential opportunities right in front of your face. Whether that's investing in an index fund or investing in individual stocks or investing in your favorite stocks or ETFs, you know, you're going to miss those opportunities if you're really, really fearful right now. So just my 2 cents on the thought. All right. So there was U.S. stocks closed slightly down as traders mull over auto tariffs. So auto tariffs officially came into effect today, if I'm not mistaken. I might be a day late on that. But basically, you know, President Trump did enact the tariffs for autos at 25%, and the market kind of lulled. It was kind of seesawing. It wasn't really, you know, one way or the other. And that was kind of interesting, right? That was really interesting. I thought it was. I was looking at the markets and just kind of keeping my eye on them. And at one point it dropped substantially, but then recovered at the end of the day. But it was muted. It was about 50 basis points, right, in the red. So it's like investors don't really care, or they already price this in, or they're just, you know, waiting for more information on April 2nd. This was almost like just a taste of what it is, right? A taste of what's to come. But yeah, you know, that was just interesting, I thought. And again, April 2nd is supposed to be Liberation Day. This is when all the slew of tariffs are going to come out. So this is really when, you know, we'll see what's going to happen with the stock market. There's a lot of financial pundits out there. Some are saying we're headed straight for a bear market, an even deeper correction, even deeper bear market. There's some that are saying that, you know, this is a J-shaped recovery or a V-shaped recovery. We're going to be good, and, you know, greener days are ahead. Depending on who you believe, depending on the data points presented, you know, some are also saying we're headed for a recession. And, you know, again, we have more lows to go. Again, it's you got to come to your own conclusion. There is no right answer. I'm of the camp that I'm just, you know, putting money where I find the opportunity. I still am going to try to hold some cash and then take advantage of other opportunities as they arise. So again, we'll see. Coreweave is going to be probably a little portion of this stream because this, you know, again, I covered this and I think it's worth covering, right? This is why you got to be really careful and not ride hype. So Coreweave prices IPO at $40 a share, below expected range. When you looked, so when Robinhood came out and said, hey, we got Coreweave, the IPO is coming, there was a lot of hype around this thing, right? There was a lot of hype. I was really hyped about it because this is an NVIDIA-backed company, right? An NVIDIA-backed company. Coreweave could have a huge part in the whole AI revolution providing data centers, right? They have a very special niche, and that niche is that they provide data centers with GPU specific graphics and GPU specific server racks. So they're not, doing like, Intel or AMD server racks. They're more specifically providing these servers that are going to help power AI workloads. So this is what was really special about them. This is what their whole niche was. Now, you dig a little deeper and you find out that Coreweave, they used to go by another name back in 2018, I think, maybe a little earlier than that, but they used to actually mine Ethereum. So this company was mining Ethereum. That was their whole niche. They ordered a ton of, NVIDIA GPUs, and then they ended up, kind of pivoting, and they started taking advantage of the whole, AI need for GPUs, right? So this is when they kind of made the switch. But again, you dig a little deeper than that, and a shout out to Nanalyze, who actually did a really deep dive on this. This is where I learned this from. But Nanalyze did a really good deep dive on Coreweave and the founders, and they found that they've done some shady things. So I'm actually really surprised that someone like Jensen Huang, CEO of NVIDIA, would actually partner with somebody like Coreweave. But NVIDIA also has a huge stake in Coreweave, as does OpenAI, right? The makers of ChatGPT. So all signs were pointing that Coreweave was going to be a really good company. But again, when you start digging into the actual weeds of Coreweave, you start to realize that there's a lot of dirt, right? There's a lot of things wrong with the company. Data centers are notoriously high in CapEx. I mean, of course, they have to purchase all the equipment, right? So, I mean, when I heard that, they were high in their CapEx, I mean, I kind of like rubbed that off. It's like, whatever. I mean, no duh. Whether you're investing in Digital Realty Trust or Equinix, ticker EQIX, CapEx is going to be high because of the data center, because of the niche that they're in, right? They're a technology company. They have to purchase very expensive hardware. But the problem becomes when, one, Coreweave missed or defaulted on a loan to Blackstone, right? That was a big one. They defaulted on a loan. OpenAI has a $11 million or $11 billion contract with Coreweave over the next 5 years. So you would think that would also be a good tailwind, that this would be an exceptional company to invest in. But that is not the case either. Not only did Coreweave founders start dumping shares late last year, if I read the article correctly, but they started dumping a lot of shares late last year, because they were talking about IPOing. So they started selling a bunch of their shares. Again, that's a red flag. But as you continue to dig a little deeper, Microsoft is their biggest customer, right? Microsoft is their biggest customer. And Microsoft came out recently and said that they're going to stop, or they're going to decrease their dependence on, data centers, right? They don't need that demand. They don't need that much server space or that much data center, because Microsoft's and OpenAI's partnership is, kind of going through a funny phase right now where OpenAI wants to build their own data centers. They were going to rely on Microsoft for that, for that capacity, but now that is not the case. So, how does this all relate to Coreweave? Well, OpenAI again has an $11 or $12 billion contract with Coreweave. It's an NVIDIA-backed company, and Microsoft is their biggest customer. All right. So you guys got to kind of put all the dots together. So Coreweave, very disappointing, very disappointing. They were going to release shares at between $45 or $47 and $55, and now they dropped to $40 a share, right, for their IPO. And this is 2 days or a day before their IPO. So this is supposed to be one of the biggest IPOs over the last couple of years, one of the largest. But now it looks like it's falling apart. NVIDIA actually had to step in and purchase, I think, upwards of $200 million worth of shares just to prop Coreweave up. Again, I don't know if this is a good move. I have no idea. I don't think so. Coreweave, again, has a lot of dirty laundry, and I wouldn't put my money in it at this moment, right? Once they become an actual public traded company, they're going to have to release a lot of financials. So I think I'm going to wait for them to release those financials, for them to release the investor presentations, all that stuff, because they don't have any of that right now on their website. You actually have to go and look for their, I think it's like a 13F or a 1F filing or something like that, S1 filing. But you have to look and read through that, and there's a lot of legal speak in there, so I didn't want to spend the time. But again, Nanalyze did an excellent job kind of weaving through the stuff. Coreweave, get it? But they went through all the stuff for Coreweave, and I think again they did a really good job. And having read through a bunch of other articles and other papers on Coreweave, it's pretty obvious that this is a company that needs to mature probably a little bit more, get their stuff intact. This is very reminiscent of Supermicro. All right, this is very reminiscent of Supermicro in my opinion, which is what does not excite me at all about Coreweave. All right, so real quick, let's just take a look at the article. This is the founder, I don't even know his name to be honest, Michael and Trader. Yeah, there we go. I saw the name before, I just didn't know like what his, how his last name, whatever. So Michael and Trader, he's a co-founder, CEO of Coreweave, and again, he's been around the block quite a bit because he used to trade, or he used to mine for Ethereum. So this is how Coreweave kind of got its start. Coreweave on Thursday, price shares at $40 in the company's IPO, raising $1.5 billion in the U.S. tech offering since 2021, in the biggest U.S. tech offering since 2021. The company, which provides access to NVIDIA graphics processing units for artificial intelligence training and workloads, had planned to sell shares between $47 and $55 each. At the top end of the range, that would have valued Coreweave around $26.5 billion based on Class A and Class B of shares outstanding, right? So now they're probably closer to a valuation of $19 billion with the current offering. Let's see what else. Coreweave counts Microsoft as its biggest customer by far. Really, Microsoft is its only customer. It's its only, like, compared to Meta and IBM and Co here, Microsoft makes up a majority of their revenue stream. So they're really, really dependent on Microsoft. And you already saw that Microsoft is planning to cut a lot of their data center capacity. So this is obviously going to impact Coreweave. Whether Coreweave, I haven't seen anything saying specifically that they're cutting ties with Coreweave or ending contracts with Coreweave specifically, but Microsoft ending kind of their broad range of not declining, but kind of rescinding some of their contracts with data centers is kind of alarming, right? Coreweave would definitely, probably more likely than not, be affected. So revenue soared more than 700% last year in 2024 to almost $2 billion for Coreweave, but the company recorded a net loss of $863 million. Coreweave's model is capital intensive, as we just covered. Again, owning a data center is not cheap. You got to pay for the electricity. You have to pay for the HVAC. You have to pay for the server racks. You have to pay for the hardware that goes into server racks. And you have to pay for the engineers that are going to operate and maintain that data center, right? On top of all the security systems and everything else. I mean, building a data center is very CapEx heavy. It is not, a cheap, thing. Again, I want to see what their investor presentation looks like and hopefully get a glimpse of what some of their data centers look like. But we'll wait for that to happen. A week after filing to go public, Coreweave announced a contract with OpenAI worth up to $12 billion over 5 years. OpenAI agreed to buy $350 million in Coreweave stock as part of their deal. All right, so again, Coreweave is going to be in the news for a little bit. I don't plan to open a position. I don't plan to purchase into the IPO because, again, I just don't think right now Coreweave is a good investment, right? AI thesis or not. It'll probably be added to some type of index fund or some type of ETF of some sort in the future. Again, I really hope it doesn't turn out like another SMCI where there's, just a bunch of fraudulent, financial documents. And, that's pretty much what caused SMCI to go down in price. Not only that, but they've been delisted before from the NASDAQ for failing to get their paperwork in on time. And then not only that, but, Ernst & Young, one of the most prominent financial firms in the country, in the United States, probably used worldwide, they opted out. They fired themselves. They removed themselves from Supermicro. They didn't want to deal with all the crap that they have, and that also caused the stock to go down, right? Because it made a lot of investors spooked. All right. So GameStop is in the news yet again, and they are offering a $1.3 billion worth of convertible senior notes. This is the same strategy that MicroStrategy or Strategy has used in the past, where they will use debt instruments to raise money so that they could go buy Bitcoin. Where is it? Yeah, so they could go buy Bitcoin. GameStop estimates that the net proceeds from the offering will be approximately $1.28 billion. The company expects to use the proceeds from the offering for general corporate purposes, including the acquisition of Bitcoin, right? When this news broke, Bitcoin, or not Bitcoin, but the price of GameStop GME spiked, right? Spiked really, really high. A lot of investors were excited about this. This is a retail brick and mortar company, for games, right? For selling consoles and selling games. It's a very archaic, it's a very old company. It's a very old, dying company, in my opinion, because again, a lot of companies, a lot of game developers, they release their games, through downloadable, downloadable software, right? Using like PlayStation's Play Store or Xbox's Play Store, or even for games for computers, you can download that stuff now directly. And even then, you still have Amazon, which is a major player in the space for delivering stuff. You can buy your video games directly through Amazon and then have it shipped to you, right? You don't have to go to a GameStop anymore. So again, I think GameStop is one of those really, really old dying breeds. It's like Radio Shack nowadays. It's just it's not as popular as it used to be, but Ryan Cohen, is really trying to find a way to keep the company alive. They're still sitting on like $4 billion worth of cash, so they're still very cash heavy, and they're trying to figure out what to do with it. So why not implement an infinite money glitch? Like buying Bitcoin and adding Bitcoin to your balance sheet, and yeah, that's exactly what they're doing. However, people did not like that. People did not really think that was all that great. GameStop's shares slide 25% as Bitcoin buzz flips to investor skepticism. Okay. So here's, after they released their actual offering, this is when the price of Bitcoin started to drop, or the price of GameStop started to drop. The move seemed to dampen the spirits of investors, with GameStop GME already flush with cash. Analysts have also pointed out that there are plenty of proxies for buying Bitcoin instead of also latching on to GameStop's struggling core business. We find it hard to understand why an investor would pay more than 2x cash value for the potential of GameStop to convert that cash into Bitcoin, particularly since the same investors can invest in Bitcoin or a Bitcoin ETF themselves, noted Wedbush securities analyst Michael Pachter. So again, they're trying to copy MicroStrategy. They're trying to copy Strategy, but I don't think it's really going to work for them. It's kind of like, it's too late, in my opinion. Lightning is not going to strike twice. Michael Saylor has always been a kind of a Bitcoin enthusiast, Bitcoin advocate, a cryptocurrency advocate. So, when his company started buying all this Bitcoin, was it back in like 2018? A lot of people saw him as like this guy who's just crazy about Bitcoin, and he's betting his company on it. Love him or hate him, he was doing it way before anyone else really was. So, now Bitcoin's trying to do it, and investors just don't have that same, I guess, appreciation for it. And not only that, I haven't looked at the actual offering like in depth, but right here, like you're not going to earn any interest on these notes. And they're due by 2030, right? So you're going to have money locked up. You're not going to make any interest. And not only that, you're betting on the price of Bitcoin going up. Why not just own the Bitcoin directly, either, through Robinhood or through Coinbase or through some other brokerage, or just have it in a Bitcoin ETF? Like, what is the point of investing in this? There's no upside for the investor. There's no juice, that's worth the squeeze here. There's nothing interesting about these notes. So even from Strategy's notes, they offer a very small amount of interest, but their notes are also due every single other year, right? It's 2026, 2027, 2028, 2029, all the way up to 2030, right? So their notes are going to come due. So I don't know. I don't think this is even worth it. I don't think this is a good idea for GameStop or anyone who's going to be investing into these convertible notes. I don't even think, retail investors, you and I, can invest into these notes. This will probably be something for like institutions, looking, I guess, for another way to indirectly get into Bitcoin. See, but MSTR's value proposition over GameStop is that they're, a leveraged indirect investment into Bitcoin, whereas GameStop, I don't even know what the actual reason is for it, but more to be seen, right? More to be seen. So if they come up in the news, I'll probably bring them up again. But I mentioned this, some time ago, that if more and more companies start adopting this approach of adding Bitcoin to their balance sheets, creating their own Bitcoin treasuries and all this other hoo-ha, I don't know if that's going to be a good thing for cryptocurrency, for Bitcoin in general, right? Because again, if you look at the meaning of Bitcoin, the whole idea behind Bitcoin is that it is a decentralized, asset class, or decentralized, coin that's not supposed to be owned by any one entity or any one government. So now you have all these companies starting to shore it all up. What happens if one of these companies owns a massive amount of Bitcoin and they have to sell at a liquidation event because they're solvent, or they're insolvent, I guess. Basically, they have to go bankrupt. Like, who knows what would happen, right? So that is, more to be seen, right? More to be seen, which is, I don't even know what to make of it. All right, so moving on. Trump warns of greater EU-Canada tariffs if they plan economic harm to the U.S. So now the trade war has begun. The trade war is about to ramp up. So you have the EU, right? We're slapping them with 25% tariffs. Canada's getting hit with a bunch of tariffs. Mexico's getting hit with a bunch of tariffs, but they're not part of this plan between the EU and Canada, although they probably will be. So now you have the EU and Canada looking at how to basically give this back to the United States, right? Have their own reciprocal tariffs to our reciprocal tariffs. So this is about to get spicy again. Got to wait until April 2nd. I don't think we're going to be hearing any more good news. Trump is very adamant about implementing these tariffs. He's using very dovish talk like, we'll be flexible. We'll see. So they're not going to be as bad as people think, right? Like, he's saying these things. Again, he's not telling us right now what they're going to be because he's waiting till April 2nd to announce them. So I think the markets are probably going to be very bumpy on a ride down over these next couple of days. But unless the actual talk turns more dovish and he does more conferences and it turns, or more positive news comes out from these tariffs, I really think we're probably going to be due April 2nd for some very good pain, or for some very deep pain. So that is just, yeah. If the EU and Canada continue to ramp up their reciprocal tariffs, this is not going to be good for the United States. This is not going to be good for United States citizens. This is not going to be good for the price of goods or services. I get that we don't want cheap goods just for the sake of having cheaper goods, but having everything, 10, 15, 25% more than what we're already paying is also not very good, right? That's also not very good for business. And this probably could sink the United States into a deep recession, or into, a mild recession of some sort. Again, Vanguard and all these other large institutions are already pricing a lower GDP growth for the United States, which is not good for investors. Definitely not good for investors. All right, so now we're going to get into the market news. Okay, so actually, I think I screwed that up. Nope, this is good. All right, so this is the S&P 500. I got to zoom in here. All right, so S&P 500, again, 33 basis points in the red. Nothing too extravagant here. Again, we've been kind of like on a decline. We had 3 days of positive gains, and then it's just been kind of these muted days these last 2 days. The markets are opening lower, and then they rise, and then they end lower. So again, I think it's investors just waiting to hear more about this whole tariff talk. We have the NASDAQ 100. Tech heavy focused ETF, and they also ended in the red, 59 basis points. We have Bitcoin that's been kind of teetering and tottering, not really going up, and they're still recovering from a very sharp decline over the last month, when they dropped to almost, basically $79,000. But they do look like they're starting to recover. But again, Bitcoin is a very volatile asset class. So, a lot of highs, a lot of lows. But it looks like it is recovering. But again, want to see what's going to happen on April 2nd. Again, Bitcoin is supposed to be that hedge against, fiat currency devaluation. So why it's crashing again is a little beyond me. We will see. Gold, still the best performing asset year to date. A lot of investors are still flocking to gold. So year to date, up 15.16%, right? Still doing very well. A lot of investors are putting their money in this as a hedge against inflation, as a hedge against, devaluation of the dollar, as a hedge against geopolitical risks. We still have a lot of stuff going on in the world, in the greater part of the world, especially in the Pacific, with China's potential plans to invade Taiwan. The United States is back in the Middle East. I think just placed a couple bombers there. You have the whole Iran, Syria thing still kicking off, and now it's the whole Houthis in Yemen. We're bombing them. So a lot of investors, it's creating a lot of uncertainty of what's going to happen, right? A lot of uncertainty of what's going to happen. And then, of course, you still have the Russian-Ukraine conflict still going on. So I could see why investors are still moving here. And now we're talking about adding tariffs, right? We're just mixing it all up, just keeping things exciting. Thank you, Donnie. For the 10-year treasury, which we use again as a barometer for mortgage rates, has been spiking up, right? And this has been spiking up because of this whole talk on tariffs. Investors are still getting very spooked, so they're moving there. Hasn't really been anything positive over the last couple of days. So this is why pretty much the 10-year treasury is continuing to trend upward, which is kind of, shitty, especially if you're in the real estate space. All right, VNQ, which is a Vanguard Real Estate Index ETF, down 26 basis points. We did have a good, pump, and then, again, ended in the red, and attribute this usually to the 10-year interest rate. And, if you dig deeper, it's because of the whole tariff talk and the EU, Canada coming out and saying, hey, we're going to team up and basically tariff the shit out of the United States. So that is what's pretty much happening, and that is what's crazy. Just want to check the comment real quick. BR Supreme Constitution, what's up, man? Hey, welcome back. Shocked investors will trust GameStop. I wouldn't trust him at all. I mean, honestly, sitting on $4 billion in cash, respect. Since GameStop is going downhill, I just parked the money in a 4% money market account. That's $160 million a year in interest. I don't know why they don't do, I don't know why they really want to go for Bitcoin. It's just, it doesn't make any sense. And I think Ryan Cohen is just trying to keep the company up. And again, Ryan Cohen was the CEO or founder of Chewy, the freaking cereal bars for kids. So he was the CEO founder of that. I believe he exited that company. He sold it. And then that's when he was brought on to GameStop as their CEO. And he had this whole, plan for GameStop. And then that's what started the whole GameStop mania and yada, yada, yada. You guys know the rest of the story. But yeah, just own the Bitcoin. I don't know why people just won't own the Bitcoin, that they'd rather invest into something like MSTR for a little more of a pump. But you could just invest in an ETF or own the Bitcoin itself, I don't know. I don't know. You tell me. All right, so we're going to do a quick portfolio update, and then we will call this stream, guys. All right, so let me pull up the Robinhood portfolio here. So I hope you guys can see that. So positions still remain the same. The Ethereum cover call ETF came out with a distribution. So they're going to be paying, I think, $1.54 for every share. So I'll be getting about like $850-ish, $860-ish from this, which is a total bummer because I was expecting a lot more. But, Ethereum has been trending downward. So I don't know if they're ever going to recover. I really don't. It seemed like a good idea at the time. Everything always does. But, to purchase an Ethereum cover call ETF because Ethereum was down so bad. I think it was down at the time like 35 or 40% when I bought into it. And it looks like it's just been going down even more. So right now it looks like it's stable at around the $2,000 mark. It's dropped down to like 19,000 or $1,900, dollars, 1975 or something like that. But it's usually been hovering between that range and like 2,100. So I don't know if it's going to ever reach the $3,000 range. I don't want to wait and find out. I think I'm going to just sell out of this once I get the dividend. And yeah, that's when Ethereum is going to skyrocket to $3,000. As soon as I sell this, that is what's going to happen. I already know it. So, but yeah, I want to get the money out and probably put it into something else. What that something else is, I haven't quite figured that out. I could just put it back into XDTE and XPay and then just call it a day and collect the dividend until I find something interesting to invest. But there's, there's just so many moving parts right now. I don't really know what to do. NVW is down $1,500, taking a hit, recently. Right after I bought in, I bought $10,000 worth of shares on the 24th of March and bought another 10,000 on the 25th of March, thinking that we were going to continue heading up. And then it took a massive dip today and, yesterday. So that was kind of shitty to go through, but it is what it is. This is investing. XDT, XPay are still continuing to, do their thing. They're just following basically the S&P 500, although I'm a little surprised that XPay is actually down more than XDTE, but it is what it is. It's down by a whole other percentage point. PLTW, again, is going to rise with the price of Palantir, and actually it's my only green position in this portfolio right now. Palantir is, again, I'm still very bullish on Palantir for the long term. They have a lot of exciting stuff. Maybe Anduril, which is a robotics, defense company. They produce a lot of drones, for basically strapping bombs to them and then rushing them into the enemy. Maybe they will come in an IPO sometime this year, because that is probably a company I would really, really be interested in. Anduril, they have a lot of cutting edge robotics technology for defense warfare. And if you guys are looking at what's happening on the battlefield right now, there is a lot of drone tech being used, and it's getting more and more sophisticated. You can strap a little bomb to, a $500 drone and take out a $10 million tank. So technology is getting, more brutal, but it's getting more brutal in not only that, but it's evolving more because more militaries want to adopt drone technology. And both Anduril, Anduril's kind of breaching their way into the EU, into the EU military, so I won't be surprised if they IPO in the future that they'll already have a large market share of the defense sector in Europe, right? Which would be good for the company. Whether they do a partnership between Anduril and Palantir is left to be seen, but I think if they were to do that, that would be a killer combo, a killer combo for the next 10 years. All right. So that is what that is for this portfolio. Let's take a look at M1 Finance, and then we'll close out the stream. So M1 Finance is where I keep a bulk of the, hold on a second, a bulk of the portfolio for, bulk of the portfolio. So let me see if I gotta make this a little bigger. That's why. Okay, that's why. Okay. So this is my core portfolio. I have a couple positions in here, mostly REITs and technology ETF, VGT, some BDCs, and of course a crypto ETF. Although I haven't really put any money in there. The REITs have been doing and holding up very well despite all this market volatility, and you would think that they would be hammered the most because of home builders not being able to build homes. But because of that, that was actually a tailwind for apartments, right? Since these tariffs are going to be impacting a lot of lumber coming from Canada, that's going to affect home builders. We didn't see an interest rate drop, from the Federal Reserve. So again, home builders are pretty much stuck in the mud. They can't do anything. They can't build anything. Everything costs so much. So right now, apartments are killing it. They're actually my best performing assets in the REIT portfolio. Next to strip center REITs, which is, a mix of retail and apartments. And then you have storage REITs, right? Which, self-storage. Casino and gambling is doing really well. So in there, I'm in Vici Properties. So Vici Properties is actually doing pretty well. Yeah. So I do have some dividend income coming in over these next couple of days, and I'll be doing kind of a video just going over the entire dividend income from all the portfolio, right? From all the portfolios, M1 Finance and the stuff on Robinhood. So it should be a pretty cool video to see how much actual income I made for the month of March. Let's see how much that actually is. So that'll do it for this stream, guys. I think I covered quite a lot. BR says kudos to gambling. Hell yeah, man. Like I gambled once. I went to, I think it was like a Mohegan Sun or something. I went in with like $1,000, nothing much, right? I don't really gamble all that much, But yeah, you know, I went in with like $1,000 and probably within the hour it was all gone. So, you know, YOLO. So not the best use of money, right? And I don't know how to play most of those games like poker or craps or I think they have the roulette. Like I think I was playing mostly the roulette. So yeah, where will I put everything when I retire? That's a good question. I know I'm going to keep the REITs for absolutely for sure. The technology ETF that I have in here, I'll probably hold on to that for as long as possible as well. Cause you know, again, I expect it to grow, substantially over this next decade. REITs, the reason why I want to keep them is because I'm very bullish on real estate. I like real estate. I like the asset class. I invest into physical properties as well. You know, like apartments and houses. So I'm very bullish on real estate as a whole, as an asset class. So I can't imagine myself ever selling out of the REITs. For the cover call stuff, the high income dividend yield ETFs and things like that. I don't even know if I'll be holding those long term. You know, it's interesting to hold them, but again, I don't know. I don't know. I'm not completely sold on the concept. I figured I'd try it out for a couple of months and, you know, see how it goes. You know, 6 months at least, to build up some type of performance metric for myself. If it doesn't work out, then whatever, I just get out of them, right? Sell them off. I do like the idea of higher, you know, passive income, but there's so many different trains of thought when you're investing in these things. You know, they're susceptible to NAV erosion. Does NAV erosion actually exist? Does it not exist? Then you also have the taxable events that occur when you take these dividends, because some of these dividends, or a high portion of the dividend, is return of capital. You know, so you're not getting taxed right now, but it's lowering your cost basis. And when you lower your cost basis on your shares, when you go to sell, you're going to pay a higher tax, right? And then not only that, you know, if we look at like something like XPay, and again, what's his name? Citizen of the Year did a good video on XPay, but this is, you know, supposed to pay you 20% a year. That sounds extremely high and kind of crazy. Even though the 20% is your own money, it's primarily return of capital. What happens after year 5, right? Is it still going to be able to maintain paying you 20% after you've made all your money, right? After you've been paid back. So again, there's so many questions left up, and not only that, but the ETF itself, if you look at like the underlier, the S&P 500, it does not always appreciate 20%. So again, what happens when that happens? If the index returns 5% for the year, and your cost basis went to 0, how do you make your money, right? So, I mean, these are good questions to ask, and these are good, you know, points, but you know, for now, I just want to experiment, and I'm just kind of seeing what this is. If I was to really retire and kind of put all my money into something, honestly, I'd probably bank on REITs, in all true honesty. Just because I know what their dividend classifications are. I know, you know, I'm very bullish on REITs. I'm very bullish on real estate. It's a very slow, boring asset class. There's nothing sexy in there. With these high yield income ETFs, and these products, I don't know. Like, there's still so much misinformation out there. There's so much, you know, gobbledygook crap out there. I don't know. Like, I don't know. I do like PLTW and NVW. I do like these. These are just 1.2x leveraged ETFs for NVIDIA and Palantir, and they pay, you know, an income. I'm going to, again, 6 months, I want to see how these perform and really make my own decision here. I wanted something that can grow with the underlier and not be capped, like, you know, it is with a lot of yieldmax funds. Not bashing yieldmax, of course. I'm just saying, like, cover call ETFs typically have a cap on them. But with 1-2x levered ETFs, you know, you're susceptible to the downside, but you can also capture the gains, you know, when these stocks run. Meanwhile, you're getting paid a nice dividend, right? Because Palantir and NVIDIA don't really pay a dividend at all. So this is why I like the two holdings, PLTW and NVW. So with all that being said, man, I'm going to call it a day. We're pretty much at the top of the hour. I appreciate you guys joining. Appreciate you guys watching. But that'll do it for me. And I will see you guys in the next stream. You guys have a great rest of your night, a great rest of your evening. I hope you guys enjoyed the stream, and I'll catch you in the next one. Take care, guys.